Trading is about winning and losing. We're going to talk about that next. Good day traders, I'm Stacey Burke from Stacey Burke Trading. Today we're going to be talking about winning and losing. Forex trading, or any trading for that matter, is about winning and losing. There's winners and losers. It's a zero-sum game. If you understand what that means in Forex, especially what that means is that for every winning trade that there's a losing trade. It's a zero-sum game. So in order for you to win, somebody has to lose and vice versa. And if you understand that, and you understand that the smart money tends to make the money most of the time. A few weeks ago we showed a video on, I believe it was Goldman Sachs results, and they only lost money. They lost money less than 20 days of the year or something like that. And on some days they earned in excess of $100 million. So you're competing against professionals. 80% of the money goes to 20% of the people. 95% of traders, retail traders, lose money. Now what's important about that is that if that's true, again, I ask everybody this question: what makes you different? What makes you special or smart that you think that you can come to the markets with perhaps no trading background at all? I'm not saying that you haven't been trading for a few years or anything else, but I'm just suggesting long-term consistency. What's going to separate you out from that 95%? Now these are some of the things that retail traders have figured out and have worked to their advantage. Now you can take these as a suggestion and apply them with your own understanding. For some of you, if you're already successful and you're making money, or you're consistent and you're earning an income, or you're earning money from the markets, by all means continue what you're doing. But if you're struggling and you're unable to get the results that you're after, perhaps this will help you today. Number one, trade less. So I know in past experience, I've talked about my own failings, blowing up small accounts. I would get into a winning trade, I would take 20 pips off or 30 pips, whatever that was, on a 5-minute chart, and immediately I would want to get back into the market. And of course, by the time the end of the day was done, I was probably flat again. So as a retail trader, we're driven by the excitement. We get some winning trades, we get overconfident, or I would take a 30 pip trade and then I would double up on the next trade and take a 40 pip loss, whatever it was, doubling the loss or the profit that I had made earlier. So one of the things you want to focus on as a retail trader, and if you haven't watched Anton Kreil's videos on how the whole industry works, I would suggest going and looking at that and understanding the narrative that's pumped to the public, to retail traders about day trading and everything else. Trade less. One of the ways to do that is to go to longer time frames. So the longer the time frame, the less likely any one broker or institution or central bank or anybody else is going to be able to move the markets. Now I'm not talking about a 15-minute chart or even an hourly chart, but when you get out to 4-hour and daily charts, it gets harder and harder for any one entity to move the market for very long and keep it there. So what that really boils down to is that spreads become less relevant, but also the likelihood of stop running or spiking becomes a little less relevant as well. It does happen occasionally, but thus again, if you understand sometimes how the spikes work, it's when volume dries out of the market, usually around high impact news events, and orders will move from one point to another very quickly because there's very little liquidity in the market at that particular time because it's been taken out while they wait on a news release. Longer time frames, so I know traders will sit at the screen for hours trying to get 20 pips, and that's fine. But you go and start looking at end-of-day trades, and you might get a 150 pip move on a daily bar, and obviously you might be risking 70 pips to get that, but oftentimes when there's momentum on the daily bars, there's very little heat against your position. So in some cases you might only experience 20 pips against your position, which is about your stop loss on a 5-minute chart anyways. But again, I would encourage you to look at longer time frames. retail traders have much greater odds of success on the longer time frames as opposed to the shorter time frames. Trade small. Now, a lot of people don't want to hear that. But the reality of it is most retail traders have account sizes anything between, a few $100s to up to $10,000, and in some cases up to $100,000. But often the average account is around $2,000 to $3,000. But those traders are taking positions of 100 to 200,000 lot size, and so they're heavily over leveraged for their account size. They might be profitable, but they also run the risk on every trade of massively damaging their trading account. And one of the reasons they're doing that is they're trying to make big money fast from a small account. Now, the odds are is that you are going to blow your account up. And how do I know that? Because I've done that. So I would encourage you to trade small and be patient. Scale up your account accordingly when you've got the runs on the board, and just be patient, because if you are patient long enough, your account will grow to the level where the profits that you are extracting start to become a reasonable size. And if you're patient a bit longer beyond that, you'll be trading in a larger size with your percentage of risk being manageable as well. So trade small. Number 4, if you're day trading, again, avoid news and high impact trading events. Again, traders try to speculate on movement around the news releases like payrolls or interest rates. And oftentimes the market, again, if there's been orders pulled out of the market may often spike both sides of a range, or highs and lows, support and resistance levels. And in doing so, trigger stops or trigger orders and create volatility that can potentially be damaging to your account. So again, on the longer time frames, I don't really pay attention to the economic calendar. That's just how I do things. But I would suggest if you are a retail trader and you're day trading, as much as there's an attraction there when the volatility is there, step out perhaps to an hourly chart and wait for that bar to close before you enter into the market, or prior to, and be able to manage your stop if you are in the market prior to a news release. So again, 95% of retail traders fail. So the question I ask everybody is, what's going to separate you from that 95%? If you're using, some basic systems on a 5-minute chart, or 15-minute and hourly chart, that's fantastic. And again, if you're getting the results that you're after, if you're profitable and you've got results, by all means continue to do what you're doing. But if you're struggling to be consistent, if you're struggling to get the results, or if you're finding that your trading is very stressful, I would encourage you to look at maybe adapting 1 or 2 of these approaches, and to see if it will help your trading and help you get closer to the results that you're after. So if you haven't done so, go to my homepage and get my 7-step daily routine for high performance traders. Ritualize your daily routines. Keep yourself focused on constant progress. This is a winnable game, but it will require you to be performing at a high level, especially if you want to be successful over the long term. Stay disciplined, traders. Stay focused. Keep getting better. Stay focused on constant progress. How good can we get? And may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.